Welcome to First Mover, CoinDesk TV's flagship show and your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Markets Managing Editor Lawrence Lewitton and Global Macro Editor Emily Parker. Good morning, you two. We are in the middle of CoinDesk TV's launch week. How's it going, Emily?
It's going great. How about you?
I'm still enjoying it. I still have that afterglow. You know, everyone's talking about the Trump impeachment trial going on, but are you keeping track, Lawrence, or are just glad we're not covering it?
No.
We don't need to worry about it.
No. The worst that's going to happen is I'm going to take over City Hall and demand a change in my parking ticket. That's about it. I mean, yeah, that's as close as we get.
You're going to storm City Hall. All right. Well, with that, let's get started on the show. Which major public company will be the next to invest in Bitcoin? That's the question on everyone's mind now that Tesla has converted $1.5 billion of its cash reserves into Bitcoin. If all S&P 500 companies allocate 1% of their cash holdings into crypto, investment manager ARK Invest predicts the value of Bitcoin could potentially increase by $40,000 according to a January report. Market commentators like CNBC's Jim Cramer saying every corporate treasurer should be thinking of Bitcoin and that it would be almost irresponsible not to include Bitcoin on corporate balance sheets following Tesla's buy. Lawrence, your thoughts?
With all due respect to Jim Cramer, who I've had the pleasure of working for years ago, it is irresponsible for corporate treasurers to do that, especially if you have to think about what a corporate treasurer needs to do, and that is with cash management. Their assets, their liabilities are dollar denominated. The role of the cash is either to invest in other companies, invest in the business itself, or give it back to the shareholders as either share buybacks or dividends. That is what that cash is there for. The cash is not there to take an investment in something like Bitcoin or anything else. I mean, why Bitcoin? Why not real estate? Why not? That's not what the cash is there to do. Unless your assets and liabilities and other investments are denominated in Bitcoin, that's not what that cash is for.
Emily, do you agree?
I don't have a strong opinion on this, but I will tell you that JP Morgan says it's not going to happen. So they just said that, we shouldn't expect to see a lot of big companies following suit, following Tesla's example, namely because Bitcoin is still so volatile.
All right. We also heard a report out of China. At the same time that Tesla released their report of the filing that they made this huge Bitcoin buy, what did we hear out of China?
Well, basically, Tesla was about to come under fire in China, or did come under fire in China for quality issues. So the timing was rather, as our CoinDesk article said, the timing was rather impeccable in that it was a pretty big distraction. We don't have evidence that this was intentional, but basically, as Tesla was coming under pressure for quality in China, they dropped this bombshell about Bitcoin that pretty much distracted the world from this issue.
Interestingly, the filing happened a little bit earlier than usual. The timing again was incredible. Doesn't mean it was intentional, but boy, did they catch a break with this one.
Yeah.
Yeah.
All right. Well, I know someone who will have a strong opinion on it. Our first guest predicted the 2008 market crash and earned the nickname Dr. Doom. He is a vocal critic of Bitcoin and cryptocurrencies. Joining us now from New York is Nouriel Roubini, professor of economics at NYU and CEO of Roubini Macro Associates. Welcome, Nouriel.
Hi, Christine. Congratulations for CoinDesk TV.
Thank you very much, Nouriel. All right, so the narrative on Bitcoin has shifted from a means of payment to a store of value for some. It's not so much used as a currency as it is digital gold. Institutions and public companies are buying this thesis, and we're seeing Bitcoin hit records as a result. What do you make of this institutional and corporate interest in Bitcoin underlined by Tesla's $1.5 billion Bitcoin investment on Monday?
Well, as you suggested, Bitcoin and crypto is not a means of payment. It's not a currency. It's not a unit of account. It's not a scalable means of payment. It's not a single numeraire. Now people say it's an asset. But think of it. What are assets? Assets like stocks, bonds, and real estate give you income or give you some use, like a real estate. And therefore, they have a reason, they have a capital gain. Gold doesn't give you income, but has other uses, industrial, utility, in jewelry, and therefore has also some value. And it used to be used as a means of payment. In the case of Bitcoin, it doesn't have any income, it doesn't have any use, it doesn't have any utility. So what's the value of it based on what? Based on no intrinsic value and purely a speculative bubble. That's why I argue that Bitcoin, like all the other shit coins, are worth zero. Actually negative given the hogging of energy and their mental cost. If there was a carbon tax on crypto, the value of these assets will be negative. So what's the fundamental value? What's the use? What's the utility that justifies the capital gain? None. It's a speculative bubble that is based on pump and dump, spoofing, wash trading, and manipulation by Tether. There's a total scam. So for institutional investors saying we're going to invest into crypto doesn't make any sense. You have a failing company that had a flat stock market like MicroStrategy for a decade, and its head was a coke addict, decided then to bet the entire house on Bitcoin. That's irresponsible behavior. And there's not going to be any corporate head who's going to put his cash, as you pointed out clearly, into something that is so volatile. You put your cash in something that is stable. And for somebody like Elon Musk, who knows that there's a market impact to manipulate, first take an individual position into Bitcoin, pump the price up, and then say that Tesla has invested and Tesla doesn't make money yet, it's also irresponsible and it's market manipulation. The SEC should be looking to people that have a market impact, that manipulate the price of assets. That's also criminal behavior. Criminal behavior.
Okay.
The SEC should be looking into that. Come on, it's a totally criminal enterprise. Tether is a criminal enterprise, and a bunch of whales and insiders are manipulating the price of Bitcoin and other shitcoins day in, day out. That's a fact.
Dr. Roubini, always a ray of sunshine, of course. But the question about Tether is this. We've known for a while now that it has been backed entirely by dollars. It's something like 70 some odd percent. That came out a while ago. There have been questions about its backing for some time, for several years. Yet it's still trading on par with the US dollar. Conceivably, they have enough assets, at least for a while, to keep the peg going with the dollar. So how much of a real worry is it for crypto if there's even a small run on Tether, if you will?
Well, first of all, we don't know whether it's backed 70% or not. The lawyers say 70%, but we have no idea. That doesn't mean any absolute independent audit of it. We also know they're really issuing literally at the exponential rate new tethers, literally. In the last year alone, something like 25 billion. In the last few weeks, 1 billion per week. So it looks like they're getting desperate, and it's a typical Ponzi scheme in which you maintain the value of something by issuing more of it and so on. We know there are investigations. How different is that from fiat? A number of them.
How different is that from what's going on right now with the money printing happening in Washington?
Well, the money printing in Washington is happening at the rate that is much less than the one of the issuance of fiat by Tether and other shitcoins, if you look at the chart of it. I mean, literally, the case of Tether is exponential, first of all. Secondly, central banks, if you know, they have assets that are matching their liabilities. For every dollar of currency or excess reserves that are in the central bank balance sheet, there is an asset. Foreign reserves or gold or treasury assets. So the idea that fiat currencies are not backed by anything is utterly false. If you look at the balance sheet of any central bank, there are assets and there are liabilities, and actually there is a positive net worth most of the time. Well, in the case of Tether, there is nothing backing it. The idea is even 70% is not true. And we know that every fixed exchange rate that is based on not fully backing and not fully collateralized eventually collapses. The entire history, monetary history, is that every fixed exchange rate is not backed has collapsed. It's only a matter of time. And the trigger is going to be when the indictments of Tether and Bitfinex are going to occur. And it's only a matter of time this year because we know there are investigations occurring.
Let's move to central bank digital currencies for a moment. We know that China is moving quite rapidly in this area. Do you think that the US dollar will remain the world's reserve currency?
Well, I think that the Chinese are going to go ahead, the Riksbank is going to go ahead, the ECB is going to go ahead, and until now the US was behind the curve, but they realized that the Chinese have a plan to dominate the global financial system. It's their e-commerce, is their own platform of private payment system like Alipay and WeChat Pay, and that's going to be the ERMB. And it's only a matter of time we're going to phase out cash all over the world. And if the US wants to maintain the role of the US dollar as a major global reserve currency, they will have to move to an e-dollar. The problem with that is that people get excited in the crypto world when central banks are talking about a central bank digital currency. But the central bank digital currency, first of all, has nothing to do with blockchain. It's going to be private, it's going to be centralized, it's going to be permissioned, it's going to be based on a bunch of trusted authority verifying transaction. Has nothing to do with blockchain, has nothing to do with crypto. And as a payment system, is going to dominate not only crypto, that has absolutely no payment services, but also any private form of payment system that is digital, from credit cards to bank deposits, to Alipay, to WeChat Pay, to Venmo, to Square, to PayPal, and so on. Because it's going to be cheap, it's going to be instantaneous, it's going to be instantaneous clearing and settlement, and it's going to be a system that's going to dominate any form of private money. So if and when central bank currency are going to be introduced, the problem is going to be that any form of private digital payment system is going to be crowded out, starting with crypto that doesn't have any payment service in the first place.
Dr. Roubini, so it sounds like you believe that the technology underlying Bitcoin at least is sound and that governments and central banks around the world will adopt it. And if that's the case, what happens to privacy? And you've also mentioned something about negative rates, becoming the norm. Tell us about that.
First of all, I said the opposite on the technology. The central bank digital currencies will not be based on blockchain. They're going to be private, not public. They're going to be centralized, not decentralized. They're going to be permission, not permissionless. They're going to be based on a bunch of central banks and private banks who are trusted verifiers of the transaction rather than being trustless. So the technology is not going to be blockchain. It's not going to be crypto. That's my point. Secondly, the advantage of having a central bank digital currency is that right now, if there is a very severe economic recession, central banks cannot go very negative with the policy rates. That's why they do quantitative easing, they do credit easing, because if you go lower than, say, 75 basis points, people are going to switch their excess reserves into cash that has a nominal zero interest rate. So they are not going to pay the tax. However, if you phase out cash, then you have no option than keeping your money in the digital form, and then the negative policy rate in a severe recession or a depression can go to -1, -2, -3, -4, -5, whatever you want it to be. So if and when that happens, and if there is a recession, is severe enough, central bank digital currency are going to allow you to have much more easy monetary policy with much more negative policy rates. That's the direction we're going to go.
Fascinating.
Is there anything that could happen that would change your mind about Bitcoin?
So far, no. As I said, it's not a unit of account, it's not a means of payment, it's not a single numeraire, it's not a stable store of value. I don't believe there's going to be, and with proof of work, you get 5 transactions per second. And if it was to be adopted as a means of payment, you'll have deflation because the quantity of it is limited in the long run. If you want to create a digital currency that actually works as a means of payment, its growth has to be the growth of nominal GDP, so that demand can be satisfied by supply that increases as much as nominal GDP, meaning inflation target plus the growth rate of the economy. Otherwise, you're going to get permanent deflation of every price and goods and services. So fundamentally flawed even from that point of view.
At CoinDesk, we love diversity of thought. So thank you very much, Dr. Nouriel Roubini.
Thanks for having me. A pleasure.
Pleasure.
Thank you.
That was Dr. Nouriel Roubini, professor of economics at NYU and CEO of Roubini Macro Associates. Coming up, BTC markets analysis with CoinDesk first mover editor Brad Keoun. Plus, should Apple offer cryptocurrencies? RBC seems to think so.
I love that.
Welcome back. Checking in on Bitcoin. Bitcoin settling down from Tuesday's record high above 48,000, now trading at about 45,930, just under $46,000. It's down about 1% over the past 24 hours. Also, now trading Ether. Let's take a look at Ether right now. That is trading at just under 1,800 right now. According to trade block data, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. All right, so joining us now is CoinDesk's very own first mover editor, Brad Keoun. Be sure to sign up for his newsletter, First Mover, on CoinDesk.com. Hey there, Brad.
Oh, Brad.
Hey, Brad, can you hear us?
Yeah, hey, sorry about that, Christine.
No worries. So, Brad, are there any indications that there are more corporates buying into Bitcoin?
There's a lot of speculation, Christine. We just wrote our column this morning about this very topic. Speculation about Apple getting in, Oracle getting in, because Executive Chairman Larry Ellison is on Elon Musk's board at Tesla. Speculation that pretty much any of the FANGs companies might get in. But at this point, it's just that. But you know, the big idea is there's a lot of money potentially on the sidelines. You know, even a small allocation of their corporate cash to Bitcoin would be a big deal for the Bitcoin market.
Hey, Brad, related to Bitcoin, of course, the CPI came out today. What does that tell us, and what are we looking at in terms of how the Fed will approach inflation?
The report was pretty much right on target, Lawrence. I mean, the core gauge, which is what most people look at, which excludes food and energy items, was up 1.4%. It was unchanged in the month of January, up 1.4% over the past 12 months, which is really not a lot to worry about. It's really what people are seeing in the future that they're worried about. If you look at the bond market expectations, inflation expectations, which can be sort of extracted from where the yields are trading, they've gone above 2% recently, which is the Fed's target for inflation. And if you look at that line of what's happening with the inflation expectations, it's going up fast. So, you know, I was just, you know, again, in our column today, Bloomberg News, their comment was, inflation has quickly become the biggest issue in markets on speculation the Federal Reserve will let the economy run hot out of the pandemic. I mean, this discussion colors everything, including the Biden stimulus package talks.
Brad, what's the next milestone for Bitcoin?
Sorry, Christine?
Brad, what's the next milestone for Bitcoin in your opinion?
I mean, if you would have asked me last week, I would have given you a totally different answer. I mean, what's fascinating about Bitcoin is there is so much happening, and it happens fast. And I mean, it was really interesting listening to Nouriel Roubini talk about it, because I think he probably does in many ways represent, in some ways, a mainstream view of Bitcoin, which is a very skeptical view on it. And then there's a totally different perspective, which is it is the future. It is where money is going. People don't trust dollars anymore. People say that the dollar really isn't backed by anything, despite what Nouriel Roubini says. So, I mean, who knows what's next in the Bitcoin market? But what we talked about today was that people are watching charts of the basically available Bitcoin in the market, Bitcoin on cryptocurrency exchanges, and that number is going down, which signals that if people are really going to start buying Bitcoin in a big way, it's going to be hard to find.
All right. Thank you very much for your market insights, Brad.
Thank you, Christine.
That was CoinDesk First Mover editor Brad Keoun. Don't forget to sign up for the newsletter First Mover on CoinDesk.com. Our next guest has quite a take on Apple, saying the tech giant has a clear opportunity to offer buy and sell services for cryptocurrencies. That would immediately gain market share. Joining me now to discuss is RBC Capital Markets analyst Mitch Steves. Welcome, Mitch.
Thank you for having me.
All right, Mitch, so we see Tesla making a big move into Bitcoin, but Apple seems to me to play more conservatively. Do you agree? And give an overview of your report.
Yeah, so there's basically two concepts here. So the first one I think will be very easy, which is a very simple question, which is if Apple adds 1% of its balance sheet to Bitcoin, do you think the price is going to go down? It's pretty much a self-explanatory. The price would go up, right? So the second one is on the cryptocurrency exchange side. What I'm saying here is that they've got a closed ecosystem, right? So what that means is you can do something very similar to what PayPal does. PayPal does not allow you to take your money off of the system, right? So if Apple were to integrate that into their cell phones, they would be merging software, services, and hardware into one, which is their exact business model. And then instead of being forced to deal with kind of these issues with KYC, where you can't, move your stuff off exchange, et cetera, you could keep it all in the closed ecosystem. You could be regulatory compliant. And on top of that, you would then be seen as kind of a forward-looking tech company. I think at this point, when you got Tesla, arguably one of the smartest people in the world, the CEO, Elon Musk there, despite what people think of him as kind of be more of like a flamboyant person. You can't knock on the results of what he's done for multiple companies, what he's done for the world in general, right? So when you have somebody like that step in and he apparently tried to sell to Apple, I'm pretty sure that they're at least looking at this and at least at minimum integration into their wallets makes sense because they got the most secure software in the world.
If I understand the framing of this report correctly, it's that Apple should do this because it would help prevent the U.S. government from ever banning the crypto industry. That's I believe that's how it was framed. Is that really something that's a threat? Is that my impression was that there's very little threat that the U.S. government is going to ban crypto or ban the industry. It feels like that ship has sailed.
No, yeah, so I don't think that they're going to look to ban this stuff. I mean, if Coinbase is going public, I mean, you're going to see more regulatory framework around this. I guess the bigger picture message here is if Apple helps legitimize the sector in a closed ecosystem, again, a lot of people who are really hardcore Bitcoiners are not going to go into a closed ecosystem, as you guys know, due to all the the security differences there. But for the average person who may lose their keys, lose their coins, et cetera, and all these other issues that have come up, this would be a very good alternative. And then Apple could basically make the United States a leader in the entire space forever, for good. Because if you have 200 million install base, that is effectively a country, right? I mean, we're talking about an enormous install base. So I don't know why, personally, you would spend $20 billion to try to compete against Elon Musk when you could spend 500 million or less, create a basic service that people want, and just kind of differentiate your product portfolio with a very high upside and a very low downside, because if the price goes to zero, it doesn't even matter for you.
Why wouldn't they do something like Facebook, which is create their own potentially create their own cryptocurrency? Why would they have to then? Why should they even bother becoming an exchange? Why can't they just control the process end to end?
Nobody would buy that, right? I mean, first of all, regulatory issues for issuing your own.
Why not?
They wouldn't buy it because it's a centralized currency, right? So, I mean, in the end, you need something decentralized because that's where the value is, right? So I don't agree at all with the prior comments about there being no value. Decentralization and disintermediation is the key value here, right? When you think about dematerialization, you're talking about going from like a physical map to like a digital map, right? And so that has huge value because you no longer have to carry this physical object that has no bells and whistles to it. With Bitcoin now, you can basically use Strike and you can move it around the world for free, right? So it's definitely not true that you have to pay $20 or whatever every single time. And so now what you've done is you basically dematerialize gold. So you've taken all the value that gold had. Please don't tell me that there's any real intrinsic value to gold, because if you look at the content in an iPhone, it's tiny, tiny amounts, and there's tons of substitutes you can put in there. So the vast majority of the value is just in the rarity of it, right? Just like a diamond, just like any other high-end jewelry item, it is not intrinsic value. The vast majority is just based on the scarcity of it. And so now as you got more and more people adopting it, and you got more and more people being able to send and use it for practically for free, and then you got the millennial generation who's essentially looking for ways to have a future. This is pretty much a perfect setup for crypto long term. And Apple just needs to kind of step up its game, in my opinion, and kind of help us move along here, because it's just not going to go away anytime soon. You usually don't have a $1.3, $1.4 trillion market go to zero overnight. So I think that ship has basically sailed at this point. So again, it just seems like an easy way for them to generate significant shareholder value with limited downside, even if they don't believe the Bitcoin price is worth 46K or 20K. All they have to do is help people move it around. And at that point, they will be seen as kind of a forward-looking thinker, very similar to how they were in the past. And so right now, it's kind of Jack and Elon Musk that are seen as kind of the iconoclasts or magnates. And I feel like Tim Cook needs to be that guy again.
Mitch, thank you so much for discussing your report with us.
Yep.
All right.
Thank you.
So that was RBC analyst Mitch Steves. Coming up, we head to Washington, D.C. to find out the top crypto priorities for the Biden administration. Check it out. Welcome back. Our next guest heads a leading crypto trade association and lobbying group. She is said to be instrumental in preventing the Trump administration from pushing a controversial rule on privately hosted wallets. Joining me now from Washington, D.C. is Blockchain Association Executive Director Kristen Smith. Welcome, Kristen.
Great to be here, Christine.
Great. So, Kristen, we know this Trump impeachment trial is taking up all the air in D.C., but when the dust settles down, what are the regulatory priorities for the Biden administration that will have the greatest impact on crypto?
Well, the Biden administration itself, the president, these are issues that are not on his radar. Where we're going to see the activity and the action is at the regulatory level. And a lot of that is going to depend on the people he appoints to these positions. So having Gary Gensler at the SEC is potentially going to be very interesting because he is incredibly smart on these issues and knows a lot about our space. But there have yet to be formal nominations for the CFTC and the OCC. So the agendas there remain to be seen. The good news, though, is, as you mentioned earlier, is we had a major victory early on by stopping Mnuchin from getting his rule done at the end of the Trump administration. And FinCEN has now taken a much more reasonable, measured approach in giving the industry appropriate time to comment and come up with the right solution. So we're very focused on working with FinCEN on that rulemaking right now. And we are eagerly awaiting to see who President Biden appoints to these other positions so we can get a sense of what's going to be on the table in 2021.
Just looking at the big picture, would you predict that the Biden administration would be more or less friendly towards cryptocurrency than the Trump administration at the regulatory level?
You know, it's sort of a mixed bag because with the Trump administration, we had really, really good champions like Brian Brooks, the former acting controller of the OCC, that did a tremendous amount of work to make banks and institutions much more comfortable about investing in Bitcoin and other cryptocurrencies. But on the other hand, you had a Treasury Secretary and a president himself who wasn't a fan. And so you saw these sort of two extremes. I think with the Biden administration, we're going to see a much more thoughtful measured approach where there will be, hopefully appropriate discussion and debate around what policies need to be put into place. And so I'm not sure yet if it's going to be better or worse, but it's definitely going to be probably less extreme, a little bit more thoughtful, and a little bit more measured.
Kristen, with all these people coming in who are from crypto into the Biden administration, do you think they'll make regulations actually harder because they know what to do and what could actually impede the growth of crypto if they had to?
Yeah, no, listen, I think that is a risk that you run, right? When you have somebody that actually really knows what you're doing. What was so effective when we were going after the FinCEN regulation is that they had written something that was so crazy, that had so little understanding of how these networks work, that we were able to come in and, threaten to sue on process based off the fact that there would be such irreparable harm from this type of rule. If you have somebody who's very thoughtful and knows what they're doing, they actually have an ability to inflict an incredible amount of damage. But I don't think that that's going to be the case. I think that we're going to be able to have very constructive dialogues, with the SEC and potentially the OCC and CFTC if necessary, and be able to hopefully get to a place, if it's something that's even on their agenda, where we can get good policy. So the crypto industry has been very good about working together and building these relationships, and we are fully staffed and ready to engage.
Absolutely. Great to see this evolve down in DC. Thank you for your update, Kristen.
Thank you.
Thanks for having me.
All right, that was Kristen Smith, Executive Director at the Blockchain Association. Time now to check in with Crypto Twitter with our tweet of the day. Fresh off his company's 1.5 billion Bitcoin buy, Tesla CEO Elon Musk is learning the pitfalls of trusting other firms to hold your crypto. Musk tweeting, any crypto wallet that won't give you your private keys should be avoided at all costs. Free Wallet told Elon to call customer service after he complained he was locked out of his account. It was eventually unlocked, but Elon's final response, your app sucks. Tough love. That's it for First Mover. Tomorrow you'll want to tune in for our special guest, SEC Commissioner Hester Peirce. Thank you, Emily Parker, our CoinDesk Global Macro Editor, and Lawrence Lewitton, Markets Managing Editor. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.